The Mabel Insights Cashflow module helps you plan your clients' finances and model the probability of meeting their expected future expenses. To get started, click the Cashflow Planning module on the left-hand side. Here you can view in progress or completed cash flow planning reports, or select Create Simulation to start a new one. In the general settings, enter the report name, tax jurisdiction, expected inflation rate, and select if you wish the report to show values in today's money terms or in future value terms. Next, you can create a new client by pressing the plus sign or select a client from the drop-down list and enter their date of birth, simulation start date, and simulation end date. If you are modeling the cash flow for a couple, you can add a partner when creating or editing a client in the Client Details module. In the client settings, pension and tax allowance settings can be changed. For example, if your client has already taken their pension tax-free lump sum, you will need to adjust the pension tax-free percentage to 0% in the settings. Press Create to continue. The Assets section is where you can input all the savings and investments your client has. This includes cash, ISA, GIA, pension, onshore and offshore bonds, and investment properties. To help with decumulation strategies, you can add multiple tax wrappers and investments, which can be used later to optimize a client's liquidation strategy. For each asset, you can select from all investments on Mabel, including any custom portfolios you have made. Mabel pre-fills the expected returns and fees based on Mabel risk ratings, and these figures can be overridden. We recommend updating the total fee to include advisor and platform fees. Press Next to continue. The Money In section is where you can enter all sources of money entering the plan. This includes employment income, defined benefit pension, trust income, and annuity income. Please note that regular withdrawals to support income requirements from a DC pension, for example, should be put in Money Out, as this is a depletion of an asset. All values, unless otherwise stated, should be entered as gross amounts. This is because Mabel does the tax calculations for you and works out the take-home salary after income tax, for example. When adding a money in, you can set the expected percentage increase each year as an escalation rate and define the start and end period. Press Next to continue. When inputting a lump sum or recurring, two additional options appear. Lump sum to annuity refers to money leaving the plan to purchase an annuity, and lump sum spending refers to money leaving the plan for spending purposes. Press Next to continue. In the Contribution section, you can add money to your assets. In this example, we contribute to the ISA each year. If external source is selected, this will assume you are funding the contribution from outside your current income or assets. Press Next to continue. In the Liquidation section, you can manually set the order to liquidate accounts to meet expenses, which may be useful if you want to control which investments are disinvested first. This may be useful for decumulation planning. Alternatively, you can select Optimize by Liquidation Order. The Optimize by Liquidation Order automatically sets the liquidation order to minimize taxes over the simulation period. Above the table, we show the effective tax rate over the simulation period. This is the average tax paid each year and will change based on the liquidation order selected. In the table, we show the suggest amount to liquidate each year. This helps you identify which assets and how much to sell each year to achieve the plan. Press Next to continue. The Assets Breakdown section shows the opening balance for each year. All the charts on Mabel are interactive, allowing you highlight certain assets with your clients. Mabel also calculates the total shortfall, if any, which is the additional present value of money needed to meet the client's financial goals. This can help you identify how much money your client needs to add to the plan or how much they need to reduce their expenses. Press Next to continue. The Yearly Breakdown section shows the total money in, money out, liquidations, and taxes for each year. This can help you show how expenses are funded each year. The tax breakdown section shows the tax paid each year broken down by the type of tax. For example, non-savings income tax, savings income tax, and dividend income tax. For couples, Mabel works this out on an individual basis and then show the combined total tax. In the simulations section, you can run Monte Carlo simulations to measure the probability of meeting all expenses over the simulation period. A Monte Carlo simulation considers the variability of investment and saving returns and the impact this may have on meeting the plan's financial objectives. Mabel runs 1,000 simulations to measure the probability. To run the first simulation, press Generate Simulation. A table will appear showing the different percentile outcomes of the Monte Carlo simulation. Below, we show the probability of capital loss table. This helps advisors assess a client's capacity for loss. Capacity for loss varies on a client-by-client basis. Therefore, the table shows the probability of capital loss for the starting plan value, 75% of starting value, 50% of starting value, 25% of starting value, and the probability of falling below zero. The second simulation helps advisor answer the question, what if returns are lower than expected? Press Generate Simulation and select how much to reduce your expected return assumption. For example, if an asset had a 10% expected return and you selected to lower expected returns by 20%, the new expected return used will be 8% for the simulation. The third simulation helps advisors answer the question, what impact would a market crash have on my ability to meet my financial goals? Press Generate Simulation and select the negative return and the year which it occurs. In this example, we have selected a negative 25% return at age 65. The simulation starts as normal, and then at age 65, all assets fall in value by 25%, and then the simulation continues as normal. This can be used to showcase the plan's robustness in different market events and sequencing risk. Finally, you can generate the PDF report for your records and share this with your client. If you need any more support or assistance, please get in contact. Thank you.